Good morning, traders. It's Thursday, January 24th. Just need to do a little recap of yesterday. There was some technical issue with how the emails got sent out. For some reason, when we sent an email out, the system sent an email for you to click and unsubscribe from our newsletter list. If you did that and clicked that link and unsubscribed, send us an email. We'll have to send you a confirmation link for you to get back on that email list. I apologize for the issue. Not sure why it happened. I'm still talking to the email service MailChimp about why that got sent. But anyways, all we can do is update us, tell us if you opted out. If you didn't get today's email, you'll see it and posted in the members area because every day it's the same routine. Whether you get the email or not, everything is posted on the home page of the members area and the video is posted there as well. So if you don't get the email, make sure you send us a message saying to send you the reconfirmation link, and we'll get you opted back in to that list. You'll have to look in your email, potentially in your spam folder for a confirmation. You have to open that email and click the link. All right, so let's take a look at the markets. Yesterday we saw a gap in the markets to the upside. We saw a gap higher yesterday. Market gapped higher, ended up dropping all the way down, filling the gap. I think there was a price spike yesterday as well to the downside. Had a little bit of chaos with the emails and hundreds of emails rolling in there, so things kind of got a little hectic early in the morning. But overall, the market sold down and ended up dipping into short-term oversold territory yesterday afternoon or midday, and then it started to rally back up, stuck under this blue line, this 5-day moving average overlaid on this 30-minute chart. Now, if you look at our overall cycle, we do have a more significant cycle top in the market. We are expecting it to run into some overhead resistance. We are right into this resistance zone. These previous lows are acting as pretty clear resistance at this point, but the market is still holding up at the 5-day. If it breaks the 5-day, we're most likely going to fall down to this 20-day moving average. It's going to stair step its way up each day. We'll see where price consolidates. Overall, the equities market still in a very strong uptrend at this point, but it is showing signs that it's in resistance at a resistance level with some selling, and we could see the market chatter and trade sideways for a little bit here. Now, if we take a look over at the chart of bonds, today we're seeing bonds start to move up, having a little bit of a relief pop. And yesterday we did see money move into the safe havens like utilities as well. Utilities poking up to some highs. Overall, short-term overbought territory for utilities based on a couple different things. We've got a cycle high here on the daily chart showing we could start to see this pull back. You can see every time it's made one of these nominal new highs here going forward, we've seen a sharp pullback right after that. So we do have another cycle high here. We could start to see utilities pull back. And we've tagged into this overbought territory a couple times. There's an overbought territory it reached a couple days ago and sold down yesterday at the close. It reached into this overbought territory as well, and we got an intraday cycle low. So utilities might see a little bit of a pullback today or possibly for a few days, and we'll see where the money goes in the market if it's going to rotate into stocks. We're going to see a continuation rally here and breakthrough resistance on the SP 500, or is the market going to really chatter around? The odds are we're going to see some pretty good chatter over the next week and a half, and money will be flipping and flopping between the overall stock market and then the safe havens like bonds, metals, utilities. But are expecting higher prices in the overall indexes looking forward a month or two from now. Now, if we take a look over at, let's pull up the quick spike chart here. Yesterday there was a spike to the upside and the gap. It ended up selling down all the way down, finding that oversold territory, rallying back up. Today we're set, at this point we're set to open flat on the market. There was a little spike down about, looks like 5 or 10 minutes ago. And it looks like it's the market's pulling back a little bit. Overall, flat open, small spike on the chart to the downside. If we go take a look at the rest of the market here, let's take a look at the tech sector. Overall, it's been underperforming. It's not a leading sector at all anymore. It's making a series of lower highs, lower lows, very struggling to recover. The real leaders really since December, we saw the huge sell-off in the overall stock market. The leader was really the precious metal sector, was one of the strongest sectors, having a huge rally when the rest of the market was completely collapsing. It's got a little overdone to the upside. It's pulling back, trying to consolidate. You can see here, looks like we're getting set in for a potential pivot low here in the market based on cycle analysis. You can see we've dipped down into a short-term oversold territory. This was at the close 3 sessions ago. So it is got a little bit of an upward bias going forward here on the daily chart. We might see it start to move up today potentially. At this point, it's set to gap a little lower, so we might see a gap down and a rally up, much like we saw yesterday. Gap lower, rallied up, and then put in a little bull flag here. We are looking for more or less the precious metals to hold their ground and build potentially a large launch pad over here on the right-hand chart before I think it could take another big run to the upside. Looking over the dollar, we got a pretty good pop in the dollar today. The U.S. dollar is trading higher by about 0.4%. Let me just go to the daily chart here. Here is the daily chart of the dollar. Overall, we're going to see it pop back up near these highs or the new highs up here today. Overall, it is showing we could see continued upward move in the dollar, which at this point, when you look at the cycles, you look at the price action, we ended up having a breakdown of this support trend line where price eventually kind of traded through it, broke down, and we've got this downward move now to the downside, and it could form this this bear flag formation, could chop around, continue to work its way up and get into this kind of breakdown zone, and then it could potentially roll over. That would be a good setup for precious metals. But in the grand scheme of things, I talked about this yesterday on the radio show, the US dollar is still, from 2018, it's still in a strong bull market. It's making a series of higher lows in the market. It's making a series of higher highs in the market. So it is still channeling upward. If we do get a push up here, we could see one final push, which would keep commodities under wraps for a little bit longer, but we could see the US dollar index move up to about the $100 mark. And then if it rolls over from that point in, we could see a huge correction in the dollar after that, which would probably go in line with interest rates coming to a halt. And that would trigger, I think, a big rally in the precious metals sector for a strong push for a couple months in precious metals before I think we see the overall market potentially roll over and start a major bear market to the downside for the broad equities market. Looking at natural gas, up almost 4% this morning. Let me get back to the daily chart. Here is a daily chart, big gap and pop, faded all the way back down, kind of chopping around down here. Overall, we're kind of out of the kind of a bullish mode at this point. You could argue we're going to have some type of big basing formation potentially in here. Do have an upside target of 420, but the way that this big base, this pop came into play, for it to break out of that doesn't leave a whole lot of room to get to this 410, 420 target to the upside. We'll see if it actually starts to form some type of pattern that we can trade on a breakout down here where it could potentially rally and then continue to rally up to these levels going forward. But at this point, it's formed a fairly high potential W formation, and we'll see how the chart pattern plays out here over the next little bit. Maybe we get some type of reversal bar down here. We can get into play for a rally to the upper end and potentially hold some more for a move all the way up to this upside potential target. Looking at crude oil, down 0.9%. Again, continuing to kind of flag out here. We've got several levels of resistance. Our cycle analysis shows we're going to be under some pressure here for a while. We got kind of a downward sideways market. More or less, we are trading kind of right across at resistance here. We've got a couple more significant resistance levels just above it. So I think we could see crude oil continue to chop around and build some kind of consolidation launch pad here for when the market does put in a cycle low. Potentially in a few weeks, we could start to see this run and break out. Looking for that 60, 62.50 area to the upside. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.